Hello, everyone, and welcome back to the J22 Report. I'm your host, Johnnie Market. Y'all know that drill. Hit that like button, subscribe if you already haven't. And I want to do another video today because I've been talking about the housing market extensively, and the stock market and the bad economy. And just an update, more bad news in the economic front. Philly Fed manufacturing, that has declined. That means less goods being made, but more people. That's going to push prices up again, so we'll see more inflation. And lastly, the monthly housing sales, they declined by 7% on a month over month basis. And this is the buying season, the moving season, so sales should actually be increasing. A lot of people are looking for vacation homes and other things. They probably went on a vacation, where it's at a lake house or a beach. They probably want one, but the reality is the economy's bad. Prices are up, wages are down, and this is going to start reflecting in the economic data. And the only way to really save this is deflation. And that means asset prices, it means home prices, stock prices, they have to come down. And that's just not, they don't want that to happen, but with the Fed raising rates, now it might actually be, forced onto the market. And today, the stock market went completely south. Completely south. Really bad day on the stock market front. And they said it's the Fed's higher for longer, and the hawkish mood has led to a sell-off. Bond yields are going up. And this is why I call the stock market top, is the Fed is trapped. The Fed is absolutely trapped because they know if they lower rates, inflation is going to go through the roof. But if they keep raising rates, it's going to tank. And they're hoping that they can at least get it back to the 2% rate so they can say they're done hiking. But the reality is they can't. If they want the economy not to tank, they want the stock market to be up, they want housing prices to stay high, they can't just pause rate hikes. They have to reverse them and undo all of them and let inflation run. And that's what they don't want to tell the market. And that's just the truth. I opened with this. It's hard for me to say this, not because, I believe it's true and I had revelations, but I mean, a lot of people say this, and I believe it. And I do think that the Fed will reverse course, but just not as quickly as everyone thinks. But I think the inflation genie's up, and I think all the Fed has to do for the inflation to start rising again. I mean, it is rising again because, the inflation print was higher than last time. But I mean, back up to 6 to 7% is just the Fed saying we're done with hiking rates. And I think yields will decline some. And then stock markets will decline and whatnot. And what else I wanted to get into was not just the housing market, the stock market, and whatnot, but there was one other thing. Is I saw University of Phoenix, Joe Biden's forgiveness loan plan. Now, a couple of months ago, Joe Biden had another loan forgiveness plan, and it was rate after rate after rate. And it was basically people who've paid back the loans and paid so much interest that they got it forgiven. I don't know the details, but this first forgiveness came after the original forgiveness plan that he signed before the 2022 midterms got turned down by the Supreme Court. But the second forgiveness plan was just people who he claimed paid back student loans over and over again, but because of interest, they never really fully paid them back. He just signed that. They've already played it. This is a historical injustice, and we're going to forgive the interest that they owe. And so what I think they're doing now is that set precedent. And they're using that now for this one example yesterday. University of Phoenix defraud the students. So anyone who used student loans to pay for tuition at the University of Phoenix is forgiven. They're going to go university by college by university by university by college and see if they can get forgiveness plans done there. And I think that's what they're going to do. So for all those who say student loans won't be forgiven, wait. I think they will do it over time, but I think it'll be too little too late. And as you can see, based on the government economic data, the economy's faltering. And that's why I think they're going to reverse course. Why? Because they're Keynesian and this is all they know how to do. So with student loan repayments resuming, with, I would say, student loan payments resuming, bankruptcies rising, it looks like we're going to be in recession. I think even if they didn't have student loan repayments resuming, we'd still start seeing bankruptcies because people just can't afford a lot of things. And I was looking at a chart today about bankruptcy filings, not actual bankruptcy declares, but filings. And in this post, it showed that filings are starting to become close to 2008 levels. And we all know what happened there. I wish I could cite it, but it's where I found it. So what I think they're going to do is there will be some student loan forgiveness. I think they'll probably release some strategic petroleum reserves. Who knows? Maybe they'll have some sort of stimulus bill soon, like the Inflation Reduction Act. They don't need an economic crisis to do it. They'll just try to find something. But I think in the end, meaning sometime next year, I think we'll have a recession that's so bad that the government will have to, admit we're in one. The money supply is still contracting and contracting and contracting. And that's when the Fed will have to reverse course, when inflation is no longer talked about and it's the economy. So that was the main point of my video. But also I wanted to get into one more thing, is the price of silver actually finished positive today. Despite higher yields, despite, more deflationary tendencies, silver finished positive today. And this is what goes back to what I said. The floor since 2015 of precious metals is rising. It's not the ceiling. And you want proof, you look at gold and silver market action. Gold has made new all-time highs since 2015. Silver isn't. Silver is more of a ceiling metal, and gold is more of a floor. We'll do better on the floor. It's more a conservative rise. It's less volatile than silver. So that's another proof. And the thing about the stock market is the ceiling has been rising exponentially since 2008, but the floor hasn't at all. And if you look at bad manufacturing, among others, you see job numbers coming down, more back to reality. They're still positive. They're not negative yet. But the economy, I think it's going to get so bad, they're going to have to start printing negative job numbers because they just won't be able to deny reality. And the thing is, bankruptcies are really rising. I even think, even if they forgave student loans completely, bankruptcies would rise exponentially, because if companies are going bankrupt, then their employees would go bankrupt. So it wouldn't even matter. So, and Americans are in so much debt. I think a lot of them would go bankrupt even if they didn't have student loans. But I do think the student loan payments are going to make things worse, because I think the case by case is not enough. I don't think they'll be able to do it fast enough. And I don't think they'll fully forgive student loans in all of these cases, like University of Phoenix. So anyway, you look at this stock market action, you see higher yields, higher debt levels, and you see tax revenue receipts declining. This is looking like recession, and so far it looks like my top call is holding. So we'll see if it keeps holding. If not, we'll readjust and redo the market. But if you look at price action, this is really looking. I was looking at what some chartists would say, and a lot of these chartists, including someone who works for Avi Gilbert on Twitter, said, the NASDAQ has failed and it looks like it's going down. So we'll see what happens. I think we're in a 13-year bear market now, and this is not even inning one. We haven't even thrown out the first pitch. That's what I think we're in. I think we're just getting into the stadium. So I don't even think the bear market game the 9 innings has even started. So anyway, if you like this video, hit that like button, subscribe if you already haven't. And I also want to close out, I'm starting to really get some subscribers now. I think, with my top market calls and gold, my patience with that market, I think it's starting to pay off. I think people are starting to like and listen to it, and just you hear the truth on this channel, and it's independent thinking. So, I don't go into the normal crowd, and I try to be level-headed about everything, but I'm also realistic about everything, and I'm not, delusional. I understand, things take time, and sometimes the sideline is okay, and sometimes cash is okay. So anyway, thank you for all those new subscribers. I hope if you haven't subscribed, you subscribe to this channel, and I hope to see more of you in the future.